we've had a budget policy statement having been released this week and forecasting that the country should see economic growth bouncing to 5.7% this year from 5.2% last year before accelerating to 7% by 2013. What's your growth outlook for the country?
I think my growth outlook is we are now looking back at what we had in 2009 when we had a severe drought. I think the outlook is slightly less optimistic than what has been outlined from the government policy outlook, because one of the key factors is that with our economy significantly dependent on the agricultural sector and currently undergoing a severe drought, I expect that we will have an impact on GDP growth for this year. Also the fact that we've seen oil prices going up significantly and the impact they've had on the exchange rate and therefore also on energy costs for companies like in the manufacturing sector and the overall economy, I think those are key factors that would affect growth this year.
Of course, that's just one of the factors investors are taking into consideration now, the economic climate within which these companies are operating. The other, as I mentioned a little earlier, is the political environment as well. We've got traders saying that with the opening of Parliament, the worry has been that the election may not happen next year. What's your sentiment around that?
I think the fact that with the opening of Parliament, one of the key factors that we have to address is the implementation of the Constitution, which was passed last year. And of course, for purposes of political certainty, we need to have a definite date for the general election next year. So that is going to be a challenge in terms of ensuring that the reforms are implemented on time. And Parliament currently has a serious backlog of reforms and bills that need to be passed. And that therefore means that the time that is left is not significant to be able to achieve that target. So I think that is a factor that is weighing a lot on the minds of investors with regards to how soon you're going to have a certainty about an election date.
And so within that context then, we've got the market hovering near a one-year low, which was hit, as I said, on March the 9th, that 3,810 point mark. What's your outlook for the markets moving forward, and what's going to be the catalyst to trigger an upward movement here?
I think one of the key factors is we've already talked about this. It's really about the political certainty. If we see that there is a direction in terms of the implementation of the outstanding provisions of the Constitution and the reforms that come with that, the other factor also is if you're likely to see a slowing down or a stability in the level of oil prices, I think that is also going to be a factor, as well as also the continuation of the reform process in the country to improve governance structures. I think if we see some definite political will to address the challenges that we've already highlighted, we may likely see a turnaround in the fortunes of the market.
In the meantime, we've got some turnaround in the fortunes of the companies coming through when we're looking at company earnings reports that have filtered through. TPS Eastern Africa seeing full year profit jump 33% as the tourism sector recovered last year. What did you make of those numbers, and what's your view on TPS at the moment?
I think the results by TPS are a reflection, as you said, about the performance of the tourism sector last year. I think we had a very strong performance in terms of tourism numbers, and with the company offering, the group offering premier tourism facilities, hotel and accommodation facilities in very prime areas. I think the fact that and also reflecting the quality of the product that they offer, I think the results are really a reflection of those two key factors. I think in terms of the outlook, for the company, I think the company has continued to expand in terms of destinations and therefore has reduced its reliance, I think, on the Kenyan market, and has now adopted a regional approach over the years through various utilizing the proceeds from rights issues and other capital raising avenues, and I think the outlook is fairly strong, especially when I mentioned the fact that the reliance on the Kenyan market is much less now going forward. So I think the outlook is positive for the company.
Of course, we've seen this company issue a final dividend of 1 shilling 25 per share, and it's held steady as the same, held steady compared to what we saw last year. Having said that, we've seen a slew of companies issue bonus shares as well. And I was reading a report saying that investors at the NSE are set to benefit from bonus share issues worth more than 11 billion shillings as companies, prefer to finance expansion plans by tapping into retained earnings, which shot up last year as this economic upturn came to bear. What are you making of this decision by majority of the companies on the NSE to issue bonus shares?
I think one factor is also when you look at the capital raising avenues available. I think one of the factors that I think has contributed to this is the desire by the companies to, one, also reward their shareholders, and secondly, also to look at easier ways of financing their expansion programs other than having to go to the capital markets. And I think it's also a reflection of the very strong earnings that we saw for a majority of the companies, a lot of the companies last year. And I think that will have a significant impact on the returns for investors and shareholders for this particular year and also going forward.
One of the companies that has been pretty aggressive in its expansion strategy is Kenyan. It has operations in 7 African markets from Zambia to Ethiopia. We had the company out with numbers saying pre-tax profit for 2010 rose 40%. Your view on Kenyan?
I think one strategy that is quite clear over the years is that Kenyan has diversified its businesses across the region. We have seen quite some challenges in the local oil industry, particularly with regards to infrastructure and also the fact that we now have price controls. And I think for the company, the decision that was made to expand outwards in Rwanda, Zambia, and other countries, I think is also is now bearing fruit, because you can see that that recovery and significant improvement in profitability also reflects the contribution that the regional businesses have made to the company. So I think that is a reflection of a very aggressive strategy to expand outside of Kenya.
Certainly those new markets cushioning Kenyan from the local oil disruptions that we've seen. In the meantime, we have investors warming up to Scan Group ahead of its annual results. Those numbers expected mid next month. The company's share price has risen roughly 6% in the past 2 weeks. To what degree are you interested in a player like Scan Group?
I think the fact that Scan Group is the dominant player in the advertising market in Kenya, and also the fact that we saw the recent entry into Ogilvy and the partnership that with WPP companies, I think that is the expectation. If you look at the kind of activity, media activity and advertising that we saw last year, particularly when you look at the telco industry and also health companies and awareness on HIV/AIDS, etc. Scan Group has been a key player in a lot of these media and advertising campaigns, and I think it is an expectation that the results will reflect this level of activity, and especially the fact that they're a dominant player both in the country and also expanding regionally. So the outlook is positive.